MGM Resorts International is the biggest casino operator on the Las Vegas Strip. Now, the company is in a very different place now than it was just a year and a half ago when it barely avoided bankruptcy. Yesterday, I sat down with the company's CEO, Jim Murren. I asked him about the status of the $8.5 billion CityCenter and the very active year that the company has had in the capital markets.
I think I'm finished, yes. I'm a little tired.
I'm sure.
And we're finished. The debt deal we just did, the bond deal, was the last piece of the puzzle that we had hoped to accomplish in 2010. We did the convert deal, we did another bond deal, we did the equity deal, and now this bond deal. And now we are in great shape. We've created enough liquidity that we're fine until 2013. So we have all the funds necessary to fulfill all of our obligations in 2010, 2011, 2012, and I'm very proud of that fact. It's quite an accomplishment.
I've heard you describe it as a puzzle coming together. So glad that you've been able to fit in those pieces. One big piece, CityCenter, $1.8 billion, right, that you're still working with. What happens next with that debt?
Well, we're going to refinance that deal, and we're likely going to do that by the end of this year or no later than the first quarter. And what that'll mean is we're going to put it together in a capital structure that's much more long-term and more in keeping with a project like that. I think once we complete that, and I have every expectation that we will, it's not particularly difficult to do relative to what we've done in the past. I think it'll be very positive for MGM because it'll take that uncertainty off the table and put CityCenter in a very solid capital structure going forward.
How worried, if at all, are you about demand for that debt?
I'm not that worried. People are looking for yield right now. $1.8 billion sounds like a lot of money, but it's not relative to the fact that we invested $8.5 billion. The asset quality is obviously there. CityCenter is making money. It had a profitable third quarter. It's profitable here in the fourth quarter, and Las Vegas seems to be coming back. We see evidence of that for 2011. I think there'll be a lot of demand for that paper.
All right. Well, speaking of health in Las Vegas, you're still the biggest operator there, the biggest company. How do you see the convention business? Many people have signaled, many analysts have signaled, this is really going to be the bright spot for the next year.
Well, we're having a good October, so start with that. And the town's fairly full right here. We like it in October when we have this kind of business. But going into 2011, we're going to have a very strong year, I believe, particularly in the first quarter. And we expect to see convention business up 20% or more in 2011 in terms of convention revenue versus this year. And I think that'll help lead overall revenues in Las Vegas to be up in 2011.
Just out of curiosity, how much of that convention business is coming from Wall Street?
It's not a big percentage, but it's an important part. Royal Bank of Scotland just booked a big convention for Las Vegas next year. We're happy to have them back. Bank of America was in recently. We love Wall Street. We love having them out there. They're great customers for us. It's a small but very profitable part of our business.
What about overall revenue? Jim, you just said that the convention business is going to be strong, but I've seen some estimates from analysts saying that overall revenue next year is going to be down 1 to 4%. I've also seen other estimates that say up 1 to 4%. I'm assuming you're hoping for the latter, but curious about where you see it.
Sure, I just don't see a scenario where we could be down next year. I really don't. I think I'm a fairly practical person, and we've been through, hell and back in Las Vegas. But the convention business will be up. International gaming business remains very robust. Domestic gaming business is still soft, but I don't think it's going to be worse in 11 versus 10 as consumer confidence starting to pick up. We have more airlift coming into Las Vegas in 11 versus 10. And I just think we'll have general better business activity with more visitors spending a little bit more money.
I also spoke with Murren about one of his very well-known investors, John Paulson.
John has said that he believes here in the United States we're going to have inflation. He told me he doesn't know exactly what month that'll happen or what year even, but over the next 5 years, given the fact that the government's been printing money like crazy, we're going to be in an inflationary environment. And he wants to own companies and industries that are leveraged to rising prices, and he has known this for a while, that hotel companies typically do very well because we can raise prices almost instantly to a rising environment. And he views us as a big hotel company, number one. Second, secondly, he believes that Las Vegas is not in a secular decline, that we are a cyclical town that's starting to see signs of recovery. He wants to benefit from that. He also is a real estate buyer, and he believes that our enterprise value is a fraction of what our real estate is worth. And finally, he loves our brands.
MGM's largest shareholder remains the same, Kirk Kerkorian. He recently reduced his stake to 28% this month, but he is still the largest shareholder.